Good evening traders, it's 7 p.m. here in the UK. My name's Mark and I want to take you through the entire market in terms of major market asset classes to look at. We're going to have a look at the dollar index, we'll have a look at a couple of the global indexes from the US, we'll take a look at gold, we'll take a look at bonds, and then we'll move into the crypto space as well, take a look at Bitcoin and Ethereum. Okay, so let's start with the Nasdaq 100. So if we go back to this price point here back in September 2020, this is where the monthly saw a previous swing high before we had a rotation lower, and then that next big impulsive move higher right up to the 17,000 barrier. Since then we've sold off, we've created a lower high back up in around the 15,000s, and now we've sold off again touching 12,250. Now this is quite a critical area because not only is it from this last impulsive move a 78.6 retracement looking at on the monthly, but if we go to the weekly we'll see a clear level of support, and you'll see that with multiple tests going back through this area here where that I'm just highlighting. The market broke through, it retested that area, and we saw another bull run coming. Now obviously since then the market dynamics have shifted and changed somewhat. We've seen a strong impulsive move lower, we've seen a lower high formed, and again another impulsive move lower. So looking at this from a broader and a higher time frame perspective, we are not only in a bear market, but this is now a downtrend on the weekly chart, and a bull trend will only come back into play once we break these highs. It doesn't mean we can't have a short-term rally based on a bear market. We could see something like this on the lower time frames without breaking these highs. Before then we rotate lower and either come back to test these prices or even break lower. So in the meantime, it's like, how do we continue to trade this market? Well, if you're happy to trade both long and short of the global indexes and equities, then you're essentially going to be waiting for some kind of pullback to trade the market short. If you're only a buyer of indexes and equities, well then you'll be looking at this on the smaller time frames and trying to identify where can we get basically a positive day out of the market, which, you know, if we look back, it's been few and far between over the last few months. Now we have come into a critical area which we've highlighted around the 12,250. Now if we just zoom out, what I want you to look at are a couple of key areas to potentially for the market to run into. So we could see some kind of bull market on the smaller time frame running up into around 12,800, where this could be a nice area for those people that are happy to short the market if we see some kind of rejection in this area to continue the market lower. If we break back above this area, then there's a couple of potential opportunities to watch for. One will obviously be the 13,600 horizontal level zone that I've got marked in there. The alternative option will be this descending trend line, which, if I just pull that in here, would see the market potentially run a little bit higher. You may get some confluence depending how the market gets in there, looking at this horizontal and the trend line at the same point. So you might get a false break of the horizontal, test the trend line, and then look for that lower move back down to the 12,250. So if you are happy to trade the short market or sell the indexes, then that is something to watch out for. If you're looking to be a buyer from key support levels and look for the opportunity to basically fade any sort of bear market movement, then you're gonna have to drop down some lower time frames, maybe the 15 minutes, something like this, and look for that shift in sentiment. So what are we going to look for, and what would it look like? Well, essentially, even looking at the 15-minute, we're still seeing sellers and bears in control. We've got this lower lows, lower highs being printed continually. But if we see something like this where we can see the market break and then we can get a higher high on the lower time frame, look for that high. So we've got a higher high, higher low, and then we'll look to run that back up into the 12,800, and that should give you some nice returns if you're happy to be a buyer of a contrarian phase of a bear market. So that's looking at the Nasdaq. Don't be looking to buy this market right now, and I wouldn't want to be a seller just yet. I'd want to see a retracement before I become a seller. Let's take a look at the dollar index. So dollar index, we'd seen the market test 104s, and let's just jump out to the monthly because we're going to have to go up to such a higher time frame just to see what is actually happening and look for some key resistance areas. So if we scroll out right now, we're going back to sort of 2016, 2017. We see these previous highs in here around the 103.70s. Well, last month we tested 104 and broke through and pierced a new high. This month we've started the same. We've been aggressive. We've broken last month's high, but yet if we drop down to the weekly, I want to see where this market closed as a weekly candle. You'll see that this momentum could potentially be fading at long last. Now, we haven't seen any shift in sentiment. We're still seeing the market printing higher highs, higher lows in terms of cyclical patterns, but also based on a weekly chart right now, the previous candles have printed higher highs and higher lows. So the momentum is still strong to the upside for that US dollar. If we drop down to the daily chart, oops, sorry, I just clicked the 8 hour there by mistake. If we drop down to the daily chart, you can see we had consolidation. We had a piercing of this resistance level here, just above the 103.80s, touching 104s. And in order to get short, you're going to need to see something like this. You're going to have to see this market double top, change in cycle, new support level or new base has been formed in around, let me just pull off the drawing tool. So a new base is being formed around 102.55. So we're going to have to see the market break below this candle close here and candle wick. So we want to see it break through, look for a potential rejection, and then we could look for that short-term retracement of the US dollar, and then depending on how the market unravels over the coming days and weeks, we could look to either trade this if we find support here and go back with the overall US dollar strength and momentum back to the upside, or if we do break this ascending trendline support, then we can look to continue the near term bear selling of the US dollar. So real interesting situation right now where we're looking at US dollar at extreme highs, and like I said, for the past few weeks it's not an area that I really want to be buying unless we see some deeper retracements. Let's take a look at gold. So gold has been a market that has been producing some nice opportunities, and you know, when we look at this from let's go up to the monthly chart just so you can take a look at what has actually been formed. So obviously price tested just above 2,000 back here in early mid 2020, and then we retested those highs just a couple of months ago. Now we've got a fantastic shooting star candle formation where last month's high and low printed a lower high and lower low to the previous month. We actually broke March's low. We printed a bearish monthly candle, and then since then we've broken the low of April's candle. So this is obviously pointing to more downside here on gold, and it's not moving in traditional context with the risk off scenario. So we're seeing indexes pushing lower. We've had continued sell-off in the indexes for around 5 to 6 weeks now, but yet gold is selling off quite aggressively alongside the indexes. So why is that? Well, potentially this is down to the fact that indexes or equities are being hit so hard that institutions, investors are having to sell assets to cover margin calls, and this is what's bringing into play gold selling off along with bonds, etc., in line with equities selling off quite significantly. So we need to find a base for indexes or equities, I think, before we start going to see some relief rallies, not just in the index and equities, but before we get a bit of an appetite back for gold. So we are seeing gold selling off in relation to a stronger dollar, indexes selling off, and margin calls, etc. So expecting more downside, I would forecast that we're going to come down towards 1800, which is this big bullish candle here, and then potentially maybe even as low as 1700. But again, it's all going to come down to what happens in the marketplace as we push lower. So on the higher time frame perspective, this would lead me to look or have a bias to fade any rallies. So look for selling opportunities on any rallies. The weekly chart, we can see that last week's candle gave us a big wick, a long wick to the downside, rejecting previous support in and around the 1860 candle, which if we look left, we can see there's a previous swing high there. So again, looking for the market, could we find support here again this week? Potentially, and if we do, obviously a next move up in and around 1896 could provide a decent opportunity to look for shorts. So heading to the daily chart, if we break this down now, we can see that the next thing would be if we get a clear break below 1850, then I'm looking for shorting opportunities based on any rallies. Let's just move this out of the way now because this was from earlier analysis, and I'll run through today's trade that we actually took while we're on the gold chart. So if today's candle closes below the previous candle support, which we can see was over here, this is going to give us an opportunity tomorrow that if we can basically rally back up into 1863, it should give us some opportunity. So going down to the 4-hour chart, what we can see right now is that the support that's been formed at 1858, this area here, this is where we had our previous targets for today, which was when price broke this area, which was the support level that I highlighted and deleted, was price broke down, retested in that area, and then sold off and went on to hit target. So it was quite an easy, simple trade. Like I was saying, higher time frame is pointing to the downside, so we're looking for rallying opportunities to fade. So next rally opportunity we'll look for is if price now breaks through this area here. If anything can come back into this area, I'll look to sell it and continue the move lower with extended targets, like I said, in and around $1,800. But we know the markets are very volatile at the minute. I'll be taking profits off very quickly and just looking to de-risk as quick as possible. Should we get a move back up into this previous swing high and a rejection of this level, I'll also look for selling opportunities. As I said, I'm favoring a move to the downside based on higher time frame analysis. Let's take a look at bonds. So the bonds have come into a very strong area where we could see some potential buyers step in. Now, what would this mean for the markets? Well, could it be a sign that we see a little bit of respite for gold and we see a little bit of respite for indexes? Now, you'll see going back all the way to sort of January 2000, this is a very strong demand area where the market has tested back here, led to a nice bullish impulsive move through that October recession area. You know, this is 2008 when we were in recession. We saw a big spike up in bonds. Is this something that we're going to see right now? Are we heading into a recession? Who knows? We've got CPI numbers coming out tomorrow from the US. Will we beat expectations and see more inflation pressures, or will we see a little bit of relief on the inflationary side? We don't know, but what we can say is that if we see this kind of move here, if we just bring in gold, I'm just going to overlay gold for you so you can see what happens with bonds and gold. Now, we can see 2008, this is where we had a recession, and look what happened to gold. We can see it was also a nice strong point for bonds. Right now, gold is sitting up here. Ignore the fact that they're at different prices. What we're looking at is how the angulation, maybe if I just change the candles to a line chart, so it'll be a blue and orange. You see how they are very correlated through certain periods. So what I'm looking for is potential buyers to come in bonds. If they do, and we see buyers and we see the sentiment shift in bonds, then we could start to see some appetite for gold and see gold start to push higher. Whether that happens mid-June, mid-July, or if we see it right now, but we really need to see the market start to see a little bit of appetite and buyers step in before we can see that correlation between bonds and gold play out. Let me just get rid of this now and go back to our candle chart. Last but not least, going to head over to the crypto space, because crypto has been getting beaten up in recent weeks, and if you are subscribed to my free crypto channel, you'll see that I've been very quiet in recent weeks, recent months. Only thing that I posted was a short opportunity with 39,000 next target, and I'll show you the exact trade. It's still on there right now, but we are looking at a very interesting area for the market to potentially give us some buying opportunities. So this was the trade we were looking at, 30,000 major support, and we highlighted this selling opportunity in and around this bear flag that had been formed, and we closed it out at 39,000, just above channel support or flag support. Market's broken out. We tested 31,800, which if I go to the weekly chart was the highest, or should say the lowest weekly close since we go back to December 2020. So that's over here, so December 2020. If we look at this candle close here, this was the lowest close since December 2020. Now, what does this mean? Well, obviously this candle's only just 1 day old, and we've got another 6 trading days left of the crypto market. So this could finish bullish, it could finish bearish, we don't know, we're only 1 day in, but it has been a bit of a slaughterhouse today. Bitcoin's 8.1% down as it stands at the minute, and Ethereum 8.85. So what I'm looking for, and the way I sort of look at this market, is I'm not interested in any altcoins or anything until we start seeing some appetite buying from Bitcoin or Ethereum. And then what that'll happen is we'll start seeing the profit taking and the transition of funds from Bitcoin or Ethereum into the altcoins, and that's when we'll start to see those markets getting really motivated, and you start seeing some motivated buyers. Right now, from on-chain analysis, what we do know is that most Bitcoin holders are underwater. It means their positions are offside. So basically, you've got to be a brave trader or an investor long term, where you don't mind that your positions are going to go offside because you've got belief in this market for the long term. So what's going to happen is either price is going to break through this level and we're going to come down in towards the 29,000. Now if we do come into the 29,000, there's going to be lots of stops underneath this area. So what I would expect is that the market isn't just going to stop at 29,000. I think we'll see a big flush where it'll basically take out anyone that's got stops somewhere down here, wherever it may be. We see these big long wicks, and generally that's what's happening. We're getting a flush of everyone's markets getting out, everyone's leveraged positions taken out of the market. So don't try and catch the bottom. What you want to see is you want to wait for the market to basically flush, and then as we start to come back above this zone, that's when you want to start be a buyer. Now it doesn't mean that the market is going to come straight back above. We could potentially come back down and test the previous highs from 2017 of 20,000, because between this area and there isn't any support. So the question is, how low will the flush come? And if it really does start to motivate motor, you know, we could get some real acceleration and panic selling, which will push the market even lower. So if you are in this for the long term, you know, you've got two things that you can look at. One is just waiting for the market to drop, and or the other one is you just keep averaging your price down. But you've got to make sure you've got some cash in reserves to buy these opportunities. Don't be all invested right now and not being able to mop up anything that gives you a better opportunity in the near or mid term between now and the next key sort of support areas. So 30,000, 29,100 are going to be key areas for Bitcoin, and this is where like I said, I expect to see some sort of flush, and I want to be ready on the sidelines for some very aggressive buying. Now if we go down to Ethereum is very, very similar in the sense we've got some real key support areas to watch for, where we could see some buyers stepping in. Now we've already broken through the sort of 2,500 that was a key weekly area. We are coming down to sort of a 50% extension of this last retracement that's been that we started the next impulse on. But really what does interest me is this 61.8% extension of the retracement. So if we go to the all-time high, we come down, we look at the retracement, and we basically measure our fibs from X down to A and back up to B. Where does C extension come in, and does it correlate with any nice structure points? If we look over to the left, we've got some lovely support here. We can see the market's rejected a lot of times. So $1,800 to $1,700 on Ethereum is going to be my price point to watch. This is where I want to be basically seeing the market, expect sellers to come in. I want to see some stop hunts, take loads of buyers out of the market, and then want to see price come back up, and I'll look to be buying that first higher low as we get through this area, looking for the next bull market. When that comes in, I don't know, but this is what I'm going to look for, and that's my exact plan. So hopefully you've enjoyed this evening's video where we've covered a whole spectrum of markets. If you would like us to specifically cover more crypto, more equities, more indexes, more commodities, you let us know, comment below. And if you did enjoy the video, make sure you give it a thumbs up, share it with any like-minded traders, and make sure you subscribe to the channel. Look forward to seeing you in tomorrow's video. Good night, guys. Bye bye.